Okay, Brent from TradeGuild.blogspot.com, January 9. It's late. It really is late. It's almost 2 in the morning. So we're looking at Merrill Lynch, and this is a stock that I've been short for a good part of forever, it seems like. And I want to show you something that occurred today. And this is called a harami reversal. It's actually these two candles, the last two. You get a large real body, which is the body of the candle minus these wicks, and that's an up day. And then the next day you get a star or a doji. This is a doji, and a star would look more like that, um, or even like these over here, and that falls within the body of the previous candle. It's an inside day more or less, and that's a reversal sign. And interestingly, it occurred up here by resistance. So that's nice to see. It gives it a little more meaning, I think. And if we take a look really quick at this, I'm going to call this the F3 indicator. We'll call it F3 for now. You can see what's been happening here with Merrill is it's been making these higher highs in the indicator. Um, Look what happened over here. Higher high, and we got a lower high over here. That's a negative divergence that occurred, and it sent Merrill packing. So basically, it formed up a little teeny base over here, and it started moving up again. So it got back in lockstep and started making these higher highs, and over here we got that higher high, and now we have a same type of situation that we saw occur over here. And I'm going to just zoom in on that for you. Let me zoom out a little bit. And here it is. There's the higher high. Here's the higher high, and look what the indicator is doing. So that's a negative divergence. It should be moving in lockstep with price, but it's moving down. And we see this on the daily time frame. Let's take a look at the hourly. Okay, on the hourly time frame, you can see where price is up here, indicator still low, and on the 5-minute time frame, it looks like maybe it might bounce just a little bit more, maybe back up to that 93.80 level or so, which would make a great short. So if you see that happen, maybe get a short on that. Also in Merrill, we talk about confirming our indicators. Look at that positive or negative divergence in MACD. It's just saying that the trend here is diminishing in its quality, and up here we're looking, I think, at a top. Okay, so here's PRFT, and this is, in my opinion, a short. I'm going to show you real quick the F3. Again, same type of situation. We have the high here, the higher high. Look what happens here, that negative divergence. There's price, there's the indicator. That's not good. The indicator should be moving in lockstep with price. So it is broken down on heavy volume in this level, and is pulled right back up to an area that should represent a little bit of resistance in here. And it's also got almost a little miniature, almost a harami reversal. But in any case, you know, what's the difference? It's off by a couple pennies, but I think that this is probably a short right in this level. Maybe if it closes over 1750, call it you know, you stop out of the trade, call it a bad trade, whatever. But there's not a lot of risk in that one as far as I can tell. INFY, if you're a listener or reader of the blog, you know that I've talked a lot about triangles and how they function in different patterns, as continuation patterns, as bases, and as tops. This one looks like a top. There's that diminishing volume. MACD is just falling apart. Although you can't really use MACD when it gets into a trading range like this, but you can see right here and here when it was still trending, it was falling apart. If we take a look real quick at F3, this is where it gets really nasty. I mean, look what happened here. Indicator is moving up as it should at this level over here, that higher high, and it's making lower lows. Boom. That's very bad. That's very negative. Then it is plunged basically to new lows for the entire year. In my mind, this is signaling a lot of distribution. You can see the same thing in TSV over here, that downward slope. the cross below the moving average over here and over here. So in my mind, I think INFY is a short, but there's volatility at top, so you got to have a kind of a wide stop on that one. Okay, so here's CHT, and again, this is another one that I think is a short. There's a really nice Harami reversal right there. I marked that one to show you guys, and you can see it doesn't always mean you know, a bear market's coming, but it's just a short-term change in trend that could lead to anything. It could be a bear market, or it could be just a correction. In any case, let's use F3 again over here, and oh, what did I do there? Try that again. Okay, so over here you see the same situation developing, higher highs, and it's lower there. So I think CHT looks like a pretty decent short as well. Okay, DTV, and let's see, I think I might have mentioned this one recently. Anyway, it broke down below that support level that was represented by this gap over here. And let's take a look at F3 and see what this is showing. Yeah, pretty bad. So by now you should be starting to pick up these divergences. This one's a very obvious one. It's making lower highs. This price is going up. So this thing is just falling apart. And telecommunications, there's been some trouble here, I think, brewing in the last couple weeks or a month or so. So take a look at DTV as a short. AATI, I like this one. While my F3 indicator is up, look what's been going on here. Price is coming down, and it takes a while to get an eye for these divergences, but what it's good to do is just compare points. Compare where price is, where the indicator is. Where's price? Draw a line if you need to. Where's the indicator? Price is heading down, the indicator's heading up. So what this is signaling is price is dropping, we're seeing accumulation, because this indicator tracks accumulation. We're also seeing a falling wedge, and falling wedge is actually bullish, and what you'll generally see with that is diminishing volume as well. Let's look at a 3-day chart. You can see that volume diminishing a little bit easier there into that wedge. Usually they break out like a triangle would, and so I like AATI for a couple different reasons, but take a look at that one. RIMM, I was short on this one, and I got stopped out. You know, I had to stop out once it broke over that 140 level. But last night, I wrote on the blog that RIMM is a short again, as of this little evening star, and booyah! Isn't that what they say? Down almost 8% today. I think there's probably a lot more to come. Let's take a look at my F3, and you can see again the indicator should be up here. It's not, and trouble is brewing in RIMM. Let's move along here. CELG, this is one that was on the blog January 3rd, December 27th. I was saying that this one's falling apart. Look what happened here, big negative divergence, and it's down, as you can see over here, 4.25% today. FRG was posted on Monday, January 1st as a short, and it is down about 12% for us, so that's pretty good. TMX was on the January 3rd video, so since then, if you short it the next day, that one's down about 7% for us. And RBY, this is an interesting one. We were a couple guys made some money because we called it a long back in this area. Some guys made some money there. This thing fell apart. But take a look at this F3 indicator. Look what it's doing. Look at these highs that it's making over here. Very, very divergent. Something's going on with this. This is a gold play, so if gold bounces, RBY may be one of the beneficiaries there. And that's going to do it for tonight. I want to just show you RBY on a couple other time frames real quick. There's an hourly time frame. It's pretty much just pulling back there. On a 5-minute time frame, it looks like it's reversing right now. So check out RBY. Check out tradeguild.blogspot.com. Thanks a lot for the recent donations from everybody. Appreciate it. Good night.